sure, sir. Yes, thank you, sir. Thank you, sir. Sorry, sir.
Am I audible, my dears? Good evening, all of you. Am I audible? Good evening, my dears. Hope you are rejoined. Kindly respond, my dears. Yeah, shall we start? Yes. Thank you, Gana. Thank you. Now, problem number 8. Identify balanced scorecard perspective from the following potential measures observed in different business sector. Number 1, weekly patient complaints. This question is based on balanced scorecard. With respect to balanced scorecard, 4 different perspectives are there. One is internal business perspective, innovative perspective, financial perspective, and customer perspective. This roll one, 4 different perspectives with respect to balance scorecard. We have to identify appropriate perspective. Weekly patient complaints. That comes under what? This from the hospital industry. This type of evaluation measurement is comes under internal business perspective. How many patients are coming in? How many patients we are given the treatment? This measurement and all comes under internal business perspective. Next, patient satisfaction survey comes under customer perspective. Whether customer got satisfied or not. So that comes under the customer perspective. Next, flight cancellation rate. That's for airline industry. Flight cancellation rate comes under again customer perspective. On-time performance of airline. This also airlines. On-time performance comes under the airline industry. Internal business perspective. Next, number of grants awarded. This is for, we can say how much the government grant has awarded. It's purely based on innovative perspective, also called learning and growth perspective. Then outstanding loan balance, deposit balance of banking company. This is purely based on banking industry. This comes under the financial perspective. Banking industries, financial perspective are going to see, therefore comes under financial perspective. Employee turnover rate, healthcare unit and all comes under growth, innovation or growth perspective. Employee turnover, how many of them joining, how many of them resigning, that comes under what? Learning or what? Growth or innovative perspective. Patient referral rate, whether the patients are giving reference for this particular health care, that comes on purely based on customer satisfaction, nothing but customer perspective. If the customer got satisfied, they are going to give the referral. Non-interest income on banking company. This comes under the banking industry's financial perspective. Then lots of bag reported per 500 passenger. That comes under airline industry. That also comes under customer perspective. So this type of MCQ question is a famous one. We have to identify what type of perspective. It's purely based on balance scorecard. This comes under performance evaluation topic. Shall we go to the next problem? Next question. The following informations of manufacturers and sale is obtained from the records of VR Limited for the 12 months ending 31st December 2008. Product contribution in rupees. Product A 500, product B 200, product C 1500, product D 75, E 100 rupees, F 125, total comes to 2500. You are required to prepare Pareto analysis. So Pareto product contribution chart and comment the research. This question is based on Pareto analysis. You know, Pareto analysis, the concept is based on 80-20 rule. In Pareto, 80% of the revenue we are getting from 20% of the product. So, if we can concentrate that 20% of the product properly, we can be in the position to achieve the targeted sales and the profit. So, the 80-10 rule we have to apply in various places. Originally, it started with Edward Pareto in Italy. 80% of the wealth of the country lies in the 20% of the people. Based on that, the concept has been derived and it has been accepted and adopted in all other industries also. Even in TQM topic, total quality management topic, 80% of the problems rise from the, or quality of the issues rise from the 20% of the quality related problem only. So if you want to satisfy the 80% of the customer, the 20% of the quality related problem, if you are going to concentrate, we can be the position to what? Get the quality control or quality measures properly. Even activity based costing also they are applying Pareto analysis. 80% of the cost occur because of the 20% of the cost driver. So if you can going to concentrate the 20% of the cost driver properly, we can be in the position to what? Reduce substantial cost. So all the industry, they can adopt Pareto analysis. In this, we have to identify based on Pareto what are all the A category item or 80% category item. Even ABC analysis with respect to intermediate topic, you might have seen A category, B category, C category of raw material. It's purely based on value based. So 70-20-10 ratio you might have studied. 70% of the value of product lies in the 20% of the quantum of the product. Same manner, C category item, 10% value of the product lies in the 10% the quantity of the product lies in the water. Substantial quantity of the product. Quantity more means value less, and less value, less quantity, more value. That's a 70-20 and 10 ratio. So same manner here, which product is a more profitable product that we are going to identify. Product, it's purely based on contribution, nothing but how much the profit we can earn more. Where I am going to get more profit, more contribution, that option is preferable. Out of which highest contribution is what? 1500. So 1500 is the highest contribution, out of which product C. Based on the question, we have to rank, this is first rank, 1500. The next best is second rank, next best, third rank, fourth rank, fifth rank, and last rank. In this order, we are going to write. Based on the value you are going to take. So, product C's contribution 1500. Product A's contribution is 500. Product B's contribution is 200. Product F, the next one is 125. Am I right? Next 100 from product E. And last one 75 from product D. Then we have to identify cumulative contribution. With respect to cumulative contribution, 1500 plus 500 is equal to 2000 plus 200 is equal to 2200 plus 2325 plus 100, 2425 plus 75 is equal to 2500. So this we have to convert into percentage. So total 2500 value. if I'm going to convert into percentage, out of 2500, product C's contribution is 1500. So 1500 out of 2500. Therefore, what is the percentage? We are going to compute 1500 divided by 2500 is equal to how much? 60% contribution. Product C's contribution is 60%. Similarly, out of 2500, product A's contribution 500. Or if you take cumulatively, if I am going to take 2000 after adding product A, 2000 is coming, we can get cumulative percentage. Comes to what? 80%. Similarly, 2200 divided by 2500 is equal to 88%. 2325 divided by 2500 is equal to 93%. Next 97%. Thereafter 100%. This is what? Percentage of contribution. Okay. So, any doubt in the percentage of contribution? As per the Pareto analysis, 80% of the revenue we are getting it from the two products. So, from C, product C and the product A is a category item, or 80% of the contribution we are collecting from the two products. If you are going to concentrate the product C and the product A, company can be in the position to increase the overall profit. This is the agenda topic in Pareto analysis. All of you understood? Kindly text me so that I can watch whether you are listening or not. All of you understood, my dears? Shall I go to the next one? Kindly text me. Sankita, Puririda. Shall I go to the next question? Lakshmi, kindly respond. Jagan is there or not? Kindly respond. Yeah, thank you, Sankita. We'll go to next problem. Edward Limited manufactured weaving machines of standard size and sells its product to two industrial customers, namely MT Limited and KG Limited, and to Clear Macbro have shops in different cities. The maximum retail price per unit of weaving machine is 11,000 and per unit average cost of production is 5,500. That is 40% of general fixed overhead cost. The finance officer has been asked to undertake a customer profitability analysis and calculate and compare the profit margin per customer before deducting general fixed overhead to know about the real customer profitability. Following are the additional overhead information. Delivery cost 200 per kilometer. Emergency delivery cost in addition to delivery cost 21,000 per delivery, rupees 21,000 per delivery. Order processing cost rupees 6,000 per order. Specific discount and sales commission as per negotiation. Product advertisement cost, actual cost. The following data are available for each customer. Particulars: MT Limited, KG Limited, MG Pros. Sales in units: 2000 units, 1000 units and 800 units. Total delivery customer travel 1000. Total delivery kilometers travel 1000 km, 800 km, 900 km. Number of emergency delivery 210. Number of order processed 4, 2 and 8. Specific discount percentage of sales revenue comes to 20%, 20% and 15%. Sales commission 15%, 10%, 5%. Advertisement cost 8,75,000, 6,15,000, 4,30,000. You are required to analyze the profitability for each customer based on CPA, which is the most profitable. So this question is based on customer profitability analysis, CPA, customer profitability analysis. Customer wise, we have to analyze the profit. That's why it's called customer profitability analysis. You know the topic called DPP and CPA, direct product profitability and customer profitability analysis. With respect to customer profitability analysis, it's the advanced version of activity based costing. CPA is the advanced version of activity based costing. Statement of CPA, customer profitability analysis, in rupees. Particulars: MT Limited, KG Limited, MG Pro. Now, sales quantity. Kindly refer the question. Sales quantity 2000, 1000 and 800. and 800. It's in unit. Sales revenue based on selling price. With respect to selling price, any info for selling price? MRP 11,000 rupees they said. Am I right? Sales revenue at the rate of 11,000 per unit is equal to 2,000 into 11,000 is equal to 2 crores 20 lakhs. Am I right? Yeah, 2 crores 20 lakhs. 11,000 into 1000 is equal to 1 crore 10 lakhs. 11,000 into 800 is equal to 88 lakhs. This is the sales revenue. Less variable cost. Any info with respect to variable cost? Average cost of the production is 5,500. 40% is general fixed overhead. Therefore, 40% fixed cost means remaining 60% is the variable cost. So, variable cost is equal to 5,500 into 60% is equal to 3,300 units. 3,300 into number of units is equal to total variable cost. So 3,300 into 2,000 is equal to 66 lakhs. 3,300 into 1,000 is equal to 33 lakhs. 3,300 into 800 is equal to 26 lakhs 40,000. Balance is equal to contribution. So remaining contribution is equal to how much? 2 crores 20 lakhs minus 66 lakh is equal to 1 crore 54 lakhs. Kindly check it up the total. Similarly, 1 crore 10 lakhs minus 33 lakhs is equal to 77 lakhs. 88 lakhs minus 26 lakh 40,000 is equal to 61 lakh 60,000. This is the contribution. Thereafter, what are all the other costs incurred you have to identify? They ask you to find the finance officer has been asked to undertake the customer profitability analysis and calculate and compare the profit margin per customer before deducting general fixed overhead. Therefore, if at all mean, we used to do contribution minus fixed cost is equal to profit or gross profit. Thereafter, we'll reduce all the expenses. But in this question specifically, they said before deducting general fixed overhead, how much the profit per customer. So we no need to consider that 40% now. Other expenses you have to consider. What about the other expenses? Delivery cost 200 rupees per kilometer. Number of kilometers available. Right? Total delivery kilometer travel comes to 1,800 and 900. Therefore, delivery cost 200 into number of delivery kilometer. 200 into kilometers. So 200 into 1000 is equal to 2 lakhs. 200 into 800 is equal to lakh and 60,000. Similarly, 200 into 900 is equal to 1,80,000. What is the next expenditure? Emergency delivery cost. That is equal to 21,000 per delivery. Rupees 21,000 per delivery. Emergency delivery 2, 1 and 0. Number of emergency delivery. So, emergency delivery cost at the rate of 2,100 into number of emergency delivery. So, $2,100 into number of deliveries. How much? 210. So 2 is equal to 42,000. 2,000 or 21,000. Yeah, 21,000. Am I right? Yeah, 21,000 into 2 is equal to 42,000. 21,000 into 1 is equal to 21,000 and nil. So this is with respect to emergency delivery cost. Next, third one, order processing cost 6,000 per order. So order processing cost at the rate of 6,000 into number of orders. Am I right? What about the number of orders? 4, 2 and 8. Number of order 4, 2 and 8. 4 into 6,000. Then 4 into 2 is equal to, and 4 into 6,000 2 into 6,000 and 8 into 6,000. After the order processing cost, what is the next one? Specific discount and sales commission as per negotiation. Any discount is available. Specific discount 20%, 20% and 15% on sales revenue. So discount with respect to discount 20% on sales. First one is 20% on sales revenue. 2 crores 20 lakhs into 25% is equal to how much? 55 lakhs. Kindly check it up the calculation. Specific discount. First one 55 lakhs. Second one 20%. 20% on sales revenue. 1 crore 10 lakhs into 20% is equal to 22 lakhs. And 88 lakhs into 15%. 15% on 88 lakhs is equal to what? Discount. $13,20,000 is the discount. Next, specific discount and sales commission. Sales commission is also there. Right? Next, you have to go with sales commission. 15%, 10%, 5% on sales revenue. Sales revenue into 15% is equal to 33 lakhs. 1 crore 10 lakhs into 10% is equal to 11 lakhs. Then 5% on sales revenue, 88 lakhs is equal to how much? 4,40,000. This is with respect to sales commission. What next? Product advertisement cost, actual cost they are given. 8,75,000. Direct information is available. So advertisement cost 8,75,000, 6,15,000, 4,30,000. Okay, it's the advertisement cost. So revenue minus cost is equal to what? After contribution, you have to reduce all the costs so that we can get the profit. So contribution minus all the cost. First case 1 crore 54 lakhs minus 2 lakhs minus 42,000 minus 24,000 minus 55 lakhs. Am I right? Yeah, 55 lakhs minus 33 lakhs minus 8,75,000. Am I right? Comes to 55 lakhs, 54 lakh 59,000. Kindly check it up the total 54 lakhs 59,000. Similarly, second one, contribution minus all the cost. 35 lakh 92,000. Last one 61 lakh 60,000 minus all the cost. 37 lakhs 42,000. This is what the profit, customer wise profit. But we have to identify the percentage of profit also. Percentage of profit represent what? Profit divided by turnover into 100. 54 lakh 59,000 divided by 2 crores 20 lakhs into 100 is equal to 24.81 percentage. Next, similarly, 32.65 percentage and 42.52 percentage. If I put the rank, first rank, second rank and third rank. So, before deducting the general fixed overhead, profitable customer is the last customer because we are getting 42%, 42.5% profit out of the last customer. All are comfortable? Kindly text me whether you understood or not. Are you comfortable? Understood, my dears? Shall I go to the next problem? Kindly text me. Thank you. We'll go to next problem. A company produces and sells 4 types of dolls for children. It also produces and sells set of dress kits for the dolls. The company has worked out the following estimates for the year: doll estimated demand, material cost, labor cost, and estimated selling price. The last one is estimated selling price per unit. Product A, demand for the doll A is 50,000. Material cost for the same 20 rupees. Labor cost is 15 rupees per unit, whereas selling price 60 rupees. Doll B, demand comes to 40,000. Material cost 25, labor cost 15, and selling price is 80 rupees. Doll C, demand is 35,000 quantity. Material cost 32 rupees, labor cost 18 rupees per unit, whereas selling price is 100 rupees per unit. Then doll XD, demand is doll D maybe demand is 30,000 quantity, material cost 32 rupees, 50 rupees, labor cost 20 rupees, and selling price is 120. Dress material, demand 2 lakh quantity, material cost 15. Material cost is 15, labor cost per unit is 5, whereas estimated selling price is 50 rupees. 2. Encourage the sale of dress kit. A discount of 20% in its offered if it is were to be purchased along with the doll. Nothing but combo offer. If you are going to purchase doll with the dress, you will get the 20% discount. It is expected that entire customer buying doll will also buy dress kits. The company's factory has effective capacity of 2 lakhs labor hours per annum on a single shift basis, and it produces all the product on that basis. The labor hour rate is 15 rupees 15. Overtime for the labor has to be paid at a double the normal rate. Variable cost work out to 50% of the direct labor cost, Fixed cost rupees 30 lakhs per annum. No inventory at the end of the year. You are required to draw a conservative estimates of the year's profitability. So this question is based on DPP, direct product profitability. Kindly go through the question quickly. Direct product profitability. Company is producing 4 dolls and one dress kit. For that, all the cost as well as selling price information, demand also available. In addition to that, companies want to increase the dress material. For that purpose, they are giving 20% discount for the dress, provided if the dress has been purchased along with the doll. All the customers who are purchased the doll has purchased with the dress. So doll come dress means 20% discount. That is what the discount policy. And they are given whatever the dolls has sold, all the dolls they have purchased along with the dress only. Therefore, the important issue is number of dolls sold is equal to number of dress entitled for 20% discount. யாரெல்லாம் டால் வாங்குறாங்களோ அவங்க ட்ரெஸ்ஸோட வாங்கியிருக்காங்க. அப்போ the dress material குள்ளான 20% discount is applicable. Then the company's capacity of labor hours is 2 lakhs labor hour. If it's the case of overtime, double the normal rate you have to pay. Wage rate is 15 rupees per labor hour. Fixed cost is given 30 lakhs per annum. Variable cost are equal to 50% on labor cost. Labor cost 50% is the variable cost. This is what the available data. We have to prepare profitability statement. Direct product profitability statement. Hope you understood the question. Am I right? You have to prepare direct product profitability. Each product, how much the profit we are going to identify, and overall company's profit also you are going to identify. Product A, doll A, doll B, doll C, doll D, thereafter dress kits also. Am I right? This is all the product they are selling. Now, selling price of the product available in this question: 60, 80, 100, 120 and 50. 60 rupees, 80 rupees, 100 rupees, 120 and 50. Less cost with respect to cost. Material cost 20 rupees, 20, 25, 32, 50 and 15. Am I right? Material cost 20, 25, 32, 20 and 15. Labor cost 15, 15, 18, 20 and 5. And 5. Variable cost is 50% of labor cost. That is given information available in this question. Out of labor cost, 50% is a variable cost. 7 rupee 50 paise, 7 rupee 50 paise, 9, 10, and 2.5 is a variable cost. Balance is equal to contribution. Sales minus variable cost is the contribution. Contribution comes to 17 rupees 50 paise, 32 rupees 50 paise, 41 rupees, 40 rupees and 27.5 is a contribution. Contribution multiplied with the sales quantity, we can get total contribution. So, sales quantity 50,000, 40,000, 35,000, 30,000 and 2 lakhs. So, 50,000, 40,000, 35,000, 30,000 and 2 lakhs. Therefore, you can get total contribution. If you multiply 17.5 into 50,000 is equal to 8,75,000, 13 lakhs, 14,35,000, 12 lakhs and 55 lakhs is the total contribution. In that, discount is there only for the dress material. How much the discount? If you are going to purchase a doll come dress, discount is there. How many of them purchase a doll come dress? Number of doll purchase is equal to they have purchased along with the dress only. Therefore, number of doll come with the dress entitled for discount mean number of dolls sold is equal to number of dress entitled for discount. So, 50,000 plus 40,000 doll B plus 35,000 doll for C and 30,000. Is the total number of dolls sold is equal to total number of dress entitled for sale. Dress price comes to 50 rupees. Out of which, how much discount? 20% discount. In that 20% discount. Sale value of the total dress into 20%. That comes to 15 lakhs 50,000 is a total discount. So, net contribution comes to 8,75,000, 13 lakhs, 14,35,000, 12 lakhs, 39,50,000. This is the net contribution. Hope you understood how we derived the contribution. So, total contribution, combination of all is equal to total contribution comes to 87 lakh 60,000 is a total contribution less fixed cost. How much the fixed cost? 30 lakhs per annum less fixed cost 30 lakhs. In addition to that, we are having overtime premium. So, we have to do the working note for overtime premium. With respect to overtime premium, product A, B, C, D and dress. Production quantity, we are computing overtime premium. First, how many hours they did overtime, that we have to identify. Production comes to 50,000, 40,000, 35,000, 30,000 and 2 lakhs is the total production. We have to identify time required to produce 1 unit. With respect to time required to produce 1 unit, any info with respect to time required to produce 1 unit? Yeah, indirectly they given labor hour rate is 15 rupees. So per hour they are paying 15 rupees. Total wages, labor cost they paid per unit comes to 15, means if you divide 15 you will get number of hours. Am I right? To produce one product for A they paid 15 rupees. Per hour rate 15 rupees mean you need 1 hour to produce the product. Got the idea or not? For product B they have paid 15 rupees labor cost, mean per hour they are paying 15 rupees, mean you need 1 hour to complete the product. Product C, to produce they have paid 18 rupees. To produce one product 1 hour they are giving 15 rupees, mean 18 by 15 is equal to they need how much? 1.2 hours. Am I right? Similarly 15 divided by 20 divided by 15 is equal to 1.33 hours and 5 divided by 15 is equal to 0.33 hours. This is the time required to produce a product. So time required to produce a product comes to 1 hour, 1 hour, 1.2 hours, 1.33 hours and 0.33 hours. It's the time required to produce a product. So total time required. So totally how many hours they need? To produce one product you need 1 hour. 50,000 quantity they produce, therefore they need 50,000 hours. 40,000 into 1 is equal to 40,000 hours. 35,000 into 1.2 is equal to 42,000 hours. 30,000 into 1.33 is equal to, because 1.3333 you have to take, comes to 40,000. 2 lakhs into 0.33 is equal to 0.3333 if you take 66,000 hours you need. So total time taken comes to how many hours? If you add together 2 lakh 38,000 hours they need. Total time taken to complete the production. Whereas how much the available time? Capacity comes to only 2 lakhs. So capacity nothing but available time or capacity comes to 2 lakhs. Therefore additional 38,000 hours is possible only by way of overtime. So number of hours, overtime number of hours comes to 38,000 hours. Understood, my dears? Shall I repeat or are you comfortable? Kindly text me Kanna. Overtime computation புரிஞ்சுதா? Kindly text me overtime computation. Understood, my dears? So we have to pay overtime premium. How much they have to pay? Double the normal rate. What is called double the normal rate? Originally they are paying 15 rupees means wage rate. In case of overtime, additional 15 rupees they are paying. The common mistake in many students here is overtime is equal to 38,000 hours. Double the normal rate means they took 30 rupees per unit, 30 rupees per hour. We have to take only 15 only, not 30, because original 15 rupees per hour we have considered at the time of what? Computation of contribution itself. In addition to that, extra 15 hours, 15 rupees per hour only for overtime we are considering now. Therefore, original 15 plus this 15 is equal to double the normal rate will come. Are you comfortable? So here 38,000 into 30 is not supposed to take. You have to take 38,000 into 15 only, because 115 has been, first normal wages 15 has been absorbed in the contribution itself. Over and above that extra 15 only you are paying now. So 15 rupees into 38,000 is equal to 5,70,000. Balance is equal to profit. 87,60,000 minus all the cost is equal to fixed cost plus overtime premium is equal to profit. Profit comes to 51,90,000 is the profit. Understood this sum? So we solved DPP problem, direct product profitability, as well as customer profitability analysis also we did. Enjoyed this session? Enjoyed this problem? Shall we go to the next one? Next. Any specific doubt, Kanna? If you have any doubt, you can text me. You can post your comment. Any specific doubt, my dears? Okay. We'll go to next problem then. MT Limited is engaged in production of 3 types of ice cream products: cocoa, strawberry and vanilla. The company presently sells 50,000 units of cocoa at 25 rupees per unit, strawberry 20,000 units at 20 per unit, and vanilla 60,000 units at 15 per unit. The demand is sensitive to the selling price, and it has been observed that every reduction of 1 rupee per unit in selling price increase the demand for each product by 10% to the previous level. The company has the production capacity of 60,000 units of cocoa, 24,200 units of strawberry, and 72,600 units of vanilla. The company marked up 20% on cost of the product. The company management decided to apply ABC analysis. For this purpose, it identified 4 activities and the rates as follows: activity cost rate, ordering 800 per purchase order, delivery 700 per delivery, self-stocking 199 per hour, customer support assistance comes to 1 rupee 1 paise, that is what 1 rupee 10 paise per unit sold. The other relevant information for the products are as follows: particulars cocoa, strawberry and vanilla. Direct material per unit 8 rupee, 9 rupees, 6 rupees. Direct labor per unit, labor cost per unit is 5 rupees, 4 rupees, 3 rupees. Number of purchase order 35, 30 and 15. Number of deliveries 112, 112, 66 and 48. Self-stocking hours 130, 150, 160. Under the traditional costing system, store support cost and other costs are charged at 30% of prime cost. You are required to calculate target cost of each product after all deduction of selling price. After all, deduction of selling price required to achieve the sales equal to the production capacity. Okay. After reducing the selling price, maybe. Calculate, second requirement, calculate the total cost and unit cost of the product that maximum level using traditional costing system. Then third one, calculate the total cost and unit cost of each product maximum level using ABC. Compare the cost of each product, calculated 1, 2 and 3 and comment. Okay. So this question is based on activity based costing. Direct product profit and customer profitability analysis is an advanced version of ABC. Now we are seeing activity based costing. The first requirement, they ask you to apply target cost. You have to find out target cost. Company is producing and selling 3 products: cocoa, strawberry and vanilla. Current sales quantity available, cocoa 50,000, whereas maximum capacity comes to 60,500. Currently selling at 50, selling sales quantity 50,000, but capacity comes to 60,500. So if you want to reach 50,000 to 60,500 maximum capacity, for that they are given, if reduction in 1 rupee per unit of the selling price will help to increase 10% of the sales. If I am going to reduce 1 rupee in selling price, sales will get increased by 10%. So this is what the available data in this question. So we have to compute at the maximum level, to reach the maximum level, how much the targeted cost. So we'll answer for the first requirement. Statement of computation of targeted cost. Particulars: cocoa, strawberry and vanilla. 3 different products are there. Current sales quantity 50, 20, 60. 50,000, 20,000, 60,000. Then current selling price, ₹25, 20 rupees and 15 rupees. $25, 20 and 15 rupees. If reduction in selling price by 1 rupee, revised selling price, 25 becomes 24, 20 become 19, 15 become 14. If you reduce to 1 rupee, then sales will get increase. Revised sales quantity 50,000 plus 10% will get increase. Am I right? Each and every 1 rupee, 10% increase in sales. 50,000 plus 10% is equal to 55,000. 20,000 plus 10% is equal to 22,000. 60,000 plus 10% is equal to 66,000. So we can reach 55,000, 22,000, 66,000. But we want to reach maximum capacity. Whereas maximum capacity is that they said Cocoa 60,000 quantity. Strawberry 24,200. Vanilla 72,000. So further you have to reduce the selling price. Further revise in selling price comes to 23 rupees, 18 rupees and 13 rupees the revised selling price. Revised sales quantity 55,000 plus 10% is equal to 5,500. If we add 60,500 is the revised sales quantity. 22,000 plus 10% is equal to 24,200. 66,000 plus 10% is equal to 72,600 is a revised sales quantity. So we reached maximum capacity. Am I right or not? This is what the maximum capacity. So targeted cost you have to identify. Targeted cost is equal to, the requirement of the question is targeted cost. 20% on cost of product. Out of cost of product, 25% is the profit. Cost of the product is 25. So 1/4 on cost is equal to 1/5 on sales. Therefore, in sales value only we got it 23 rupees. Out of 23 you have to take 1/5. Am I right or not? So for a better clarity, targeted selling price is the same 23, 18, 13 less targeted profit is equal to targeted cost. So profit is equal to 20% on sales. 20% on cost means 1/4 on cost is equal to 1/5 on sales. So 23 into 20% is equal to 4 rupees 60 paise is a cost. 20% on 18 is equal to 3 rupees 60 paise and 2 rupees 60 paise. Therefore, targeted cost is equal to 18 rupees 40 paise, 14 rupees 40 paise, 10 rupees 40 paise. This is what the targeted cost. So the first requirement, they ask you to compute targeted cost. Hope you understood targeted cost. Now we can move to second requirement. We have to compute based on traditional costing system how much the cost of the product. Statement of computation of cost of production under traditional absorption costing. Particulars: cocoa, strawberry and vanilla. Yeah, cocoa, strawberry and vanilla. cost of production, material cost 8 rupees, 6 rupees, 5 rupees, material cost per unit. Labor cost comes to 5, 4 and 3. So, prime cost is equal to material plus labor is equal to prime cost. 13 rupees, 10 rupees, 8 rupees. Production as well as sales quantity. They ask you to compute based on maximum capacity. 60,500, 24,200, 72,600. Therefore, total prime cost comes to 60,500 into 13. It's a total prime cost. 7,86,500. Similarly, 24,200 into 10 is equal to 2,42,000. 8 into 72,600 is equal to 5,80,800. It's a total prime cost. As per traditional system, they ask you to add 30% is a supporting cost, store supporting cost. It's called what? Blanket overhead. So we are applying some blanket percentage, 30% on prime cost. That is what the information available. Am I right? So prime cost into 30% is equal to the store supporting cost. 30% on 7,86,500 is equal to 2,35,950. Similarly, second one, 2,42,000 out of is 30% is equal to 72,600. 1,74,240. Balance, the total comes to prime cost plus other costs is equal to total cost. If you make a total, 10,22,450. Then next one, 3,14,600, 7,55,040. We have to compute cost per unit also. Cost per unit is equal to total cost divided by number of unit, A by B. 10,22,450 divided by 60,500 is equal to 16 rupee 90 paise, 13 rupees and 10 rupees 40 paise. So this is called one traditional absorption costing. Based on traditional absorption costing, we got cost per unit. Understood, my dears? All are comfortable? Shall I go to the next one? Once in a while you can text so that I can understand whether you are watching or not. I will also get some comfortness. So second requirement over. Third requirement, we have to compute cost of production based on ABC. Based on activity based costing system, we have to compute. Statement of computation of cost of production under ABC. Particulars: cocoa, strawberry and vanilla. Under the particulars, ABC is applicable only for overhead. It's an advanced version of overhead. Therefore, up to prime cost remain constant. There is no difference in prime cost as per traditional absorption costing under ABC. Therefore, direct material, direct labor, total is called prime cost per unit, multiply with the production or sales quantity is equal to total prime cost. The total prime cost you can copy from here. Up to prime cost remains same only, irrespective of traditional system or ABC. So prime cost comes to 7,86,500, 2,42,000, 5,80,800. Then add overhead. Whenever you come across overhead, then only ABC is applicable. Now, whenever you come across ABC, you know what are all the steps you have to remember. First one, identification of various activities in the organization. Second step, compute cost pool for each activity. Next, classification of activities into primary and supporting activity. Next, transfer the supporting activity cost to primary activity. Then compute cost driver for each activity. Then find cost driver rate. Last step, cost driver rate is equal to cost pool divided by cost driver. Based on cost driver rate, we have to apportion the overhead. So these are all the steps you have to follow. Here, ready-made answer is given with respect to cost driver rate. Number of purchase order given, number of delivery is given, self-stocking has also given, cost driver rate also given. Ordering cost 800 per purchase order, delivery 700 per delivery, self-stocking 199 per hour, that is also given. Support system cost 1 rupee 1 paise per unit. So cost driver rate is given, therefore our solution or computation will be easy. Now, first one is what? Ordering cost. Ordering cost 800 per order. Am I right? $800 into number of orders is equal to ordering cost total. Number of orders available in this question 35, 30 and 15. So 800 into 35 is the total ordering cost. 28,000. Similarly, 24,000 and 12,000. Kindly check it up the multiplication total. Delivery 700 per delivery. Delivery cost at the rate of 700. Number of deliveries 700 into number of deliveries 112, 66 and 48. For 700 into 112, 700 into 66, 700 into 48 you have to multiply. So 78,400, 46,200, 33,600. Self-stocking 199 per customer support, per hour of customer support. Self-stocking hours available 130, 150, 160. Self-stocking at the rate of 199. 199 in number of hours comes to 25,000 is 870, 29,850 and 31,840. It's a self-stocking house. Then customer support and assistance cost at the rate of 1 rupee 10 paise per unit sold. Number of unit into 1.1, 66,550, 26,620 and 79,860. This is what customer support cost. That's all, no? Am I right? Anything else is there? So 1.1 into 60,500. Clear na? It's a customer support cost 66. Yeah. So total cost total cost comes to 9,85,820. Right? 985, 320 agana. Kindly check it up the total. 3,68,670 and 7,38,100. Cost per unit is equal to total cost divided by number of unit. 16 rupees 29 paise per unit. 15 rupees 23 paise per unit. 10 rupees 17 paise per unit. So we have identified cost per unit of each product. So as of now we did based on target costing system, how much the cost, traditional absorption costing system, how much the cost of the product, and ABC, how much the cost of product. All the three things we have completed. Then we have to compare. statement of comparison, particulars, cocoa, strawberry and vanilla. Based on target costing system, cost per unit we got 18 rupees 40 paise, 14 rupees 40 paise, 10 rupees 40 paise. Whereas traditional absorption costing 16 rupees 90 paise, 13 rupees, 10 rupees 40 paise. Based on ABC 16 rupees 29 paise, 15 rupees 23 paise and 10 rupees 17 paise. So based on that we have to comment. What about the comment? Target cost 18, ABC and total cost are within the limit of target cost. Clear? So traditional absorption costing and ABC are within the limit of target costing. Next, with respect to second one, traditional absorption costing within the limit of target cost, whereas ABC not within the limit of the target cost. Whereas third one, in case of vanilla, both are within the limit of target cost. So understood the comment, my dears? Are you comfortable? Kindly pause your comment. Are you understood Kanna? Sangeeta புரிஞ்சுதுங்களா? Any doubts? Hope you are all enjoying the session. Good. Shall I have a small break? Please for this you have to respond. Shall you have a break, my dears? Okay. We'll have 10 minutes break. Relax and come back. Hello.
Hello.
Yes.
Sir, Bully Mr. Sir.
From?
Busy here, sir. Sir, Hariharan, sir.
Yeah, you are from?
Sir, Bully, sir, local fund audit.
நம்ம கிளாஸில் இருக்கேங்க நாங்கள்.
சரி சார், ஓகே பாய் சார்.
காலைல பேசலாமா? 11 வரைக்கும் கிளாஸ் இருக்குடாங்கண்ணா.
ஓகே பாய் சார்.
தேங்க்யூண்ணா, தேங்க்யூ. Shall we start? All of you, shall we start, my dears? Are you ready? Kindly text me. Yeah. We'll go to next problem. Yeah, welcome back, my dears. Yeah, we'll go to next problem. Aditya Heavy Engineering Limited produce its only product A7. To manufacture a unit of A7, variable cost is rupees 2,20,000 is incurred. Market research has indicated that at a selling price of rupees 5,10,000, no order at the selling price of rupees 5,10,000, no order will be received. But the demand for A7 will be increased by 2 units with every rupees 5,000 reduction in the unit selling price below 5,10,000. Based on the above, determine the unit selling price for A7 that will maximize the profit of the particular company, Aditya Heavy Engineering Limited company. Note, if P is equal to A minus BQ, then MR is equal to A minus 2BQ. Second requirement, discuss the two ways to arrive right price. Third one, what are all the 3 categories of new product pricing? This is what the 3 requirement in this question. Kindly go through the question quickly. Now, shall we start? This question is based on pricing policy or pricing decision. The first one is based on economic theory of pricing. Theory of pricing based on the theory of pricing model. P is equal to A minus BQ. That comes under what? Economic theory of pricing. In that, answer for the first requirement. Just a minute. Yeah. This is based on mathematical code. Economic pricing model is based on mathematical code. Here you have to remember MR is equal to MC. That is marginal revenue is equal to marginal cost. This is the first one you have to remember. MR is equal to MC. Second one, what happened? Yeah. Am I visible now, my dears? Hope I am visible and audible. Am I right? Yes. MR is equal to MC. P is equal to A minus BQ. So we have to remember MR is equal to MC. Simplest one, you have to remember the few elements only. P is equal to A minus BQ. Here, P represent price. A represent price at which demand is equal to 0. In which level of price? Thank you, Sankeeta madam. In which level of price demand is equal to 0. Then B is equal to slope. SLOPE, slope. Formula for the slope is change in price divided by change in quantity. Change in price divided by change in quantity. Q is equal to demand. So these are all the things he is supposed to remember. MR is equal to MC, MR is equal to marginal revenue, MC is equal to marginal cost, nothing but variable cost. P is equal to A minus BQ. P represent price, A represent price at which demand is equal to 0. B is equal to slope, that is change in price divided by change in quantity. Q is equal to quantity of demand. Now, the next one is supposed to remember. MR is equal to, like MC, MR is equal to P, the price at equal to A minus 2BQ. MR is equal to P, that is A minus 2BQ. So, first one, second one, third one. The three element is supposed to have. Based on that, we are going to solve the problem. MC is the variable cost, am I right? MC is equal to variable cost of 2,20,000. A price at which zero demand is equal to 5,10,000. 5,10,000. They said if increase in demand by 2, demand got increased, okay, 2. When price reduced, demand got increased 2 units if 5,000 reduction in price. So change in price 5,000, change in quantity 2. Therefore, slope is equal to how much? 2,500. Am I right or not? Slope is equal to 2,500. So, we will substitute the same. First one, MR is equal to A minus 2BQ. Okay. Therefore, MR is equal to A. Price at which zero demand is called A. 5,10,000 minus 2 into B represents slope. How much? 5,000 divided by 2. That is equal to 2,500 into Q. Right? Q is the quantity, which quantity that we are going to compute now. That demand we are going to compute now. Understood? A minus 2BQ. So, if you substitute 5,10,000 minus 2 into 2,500 is equal to 5,000 into Q is equal to 5,000 Q. So, we got MR. By way of this substitution, we got MR. It's the first equation. Next, MR is equal to MC. Am I right? So, MR is equal to MC. MC is equal to what? 5,20,000. MR is equal to, we got it. Am I right? So, MC is equal to 2,20,000. So, MR is equal to 5,10,000 minus 5,000 Q. That is equal to 2,20,000. So, minus 5,000 Q is equal to 2,20,000. The plus will become minus here. Minus 5,10,000. So, minus 5,000 Q is equal to 2,20,000 minus 5,10,000 is equal to how much? 2,90,000. Yeah. Comes to 2,90,000. Therefore, Q is equal to 2,90,000 divided by 5,000. Comes to 58, quantity 58. Got it? So, in which price we can maximize the profit? That is what the question. So, we have to find out P. P is equal to what? A minus BQ. So, P is equal to A minus BQ. So, A, which price zero demand? 5,10,000. Minus BQ. Q is equal to 58. B is the slope 2,500. Am I right? 2,500 into 58. So, $5,10,000 minus 1,45,000. So, P is equal to 3,65,000. So, the moral is, if selling price is equal to rupees 3,65,000, company will get maximum profit. When company can, in which selling price company can get maximum profit? So, at the time of 3,65,000 selling price, company will get maximum profit. Now, kindly refer the question. Determine the unit selling price for A7 that will maximize the profit of the company. That is what the first requirement. So, answer for the First requirement is over. Are you comfortable? All of you? Next. The next one is discuss the two ways to arrive right price. It's a direct theory question. Two ways to arrive right pricing. One is price customization. By way of price customization, we can arrive the true price. And by way of price sensitivity, also, we can arrive the true pricing. So two ways are there. One is price customization. Price customization, it may be by way of product line. It may be based on product line, we can do the price customization. Based on customers' past behavior is the basis. Demography is the basis in which do the price customization. Time differential is the reason behind price customization. So, with respect to price customization, four ways are product line. What is product line? Depending upon which product you are going to get, accordingly, they can be the person to change the price. So, product line may be the base. So, if I am going to buy the phone, based on how much GB, accordingly, the rate may going to change. So, then, costliest phone, we may force to choose because of the difference in price. Second one, even if you go for theater, popcorn, they'll charge for what? Mini, large, extra large. They'll sell what? When compared to, if you want to buy mini, when compared to mini, the large is only 20 rupees different or 30 rupees different. Mini itself 180 rupees will be there. Therefore, by way of what? Another 20 rupees I can get large, means you may tempted to give what? Additional 20 rupees to buy the what? So, that may be by way of price customization. The product line may be the basis in which they can customize the price. Based on, second one is what? Customers' past experience. Based on rapport, based on goodwill, we may going to change the price depending upon the customer, based on the customer. Based on demography. What is called demography? Based on age or social status, we may going to charge. In railway ticket reservation, senior citizen, different rate for normal people. So this comes under what? Price based on demography. Similarly, army person, based on the status, they may going to reduce the price. This all comes under what? Price customization based on demography. Based on time different. Time different. Depending upon the time, going to increase or decrease. Normal ticket reservation and tatkal reservation in the train. Based on time, they may going to charge extra cost or what? Normal cost. These are all the way in which we can do price customization. So, I'll repeat, 4 different types of price customizations are there. One is based on product line, based on customers' past behavior, based on demography, based on time differential. These are all the 4 different ways are there in customization. Next one is based on what? Sensitivity. The price is sensitive. It's purely based on what? Unique value effect is the one of the base. If the product is unique in nature, peculiar in nature, negotiation may come down. Am I right? Sensitivity may come down. Nobody will bargain. So, unique value effort. So, with respect to price sensitivity, we are having what? 9 different ways are there with respect to price sensitivity. One is unique value effort, then substitute awareness. Third one, difficult comparison effort, then total expenditure, end benefit effort, shared cost effort, sunk investment effort, price quality effort, and inventory effort. These are all 9 factors are there with respect to price sensitivity. I'll repeat once again. First one, unique value effort. Second one, substitute awareness effort. Then difficult comparison effort. Substitute awareness, thereafter difficult comparison effort. Next, total expenditure effort. Then end benefit effort. Shared cost effort. Sunk investment effort. Price quality effort. And inventory effort. These are all 9 factors with respect to which affect the price sensitivity. So, if the product is unique, first one is unique value effort. If the product is unique, nobody will bargain. Sensitivity of the price will come down. Substitute awareness effort. For one particular product, more substitutes are available. Then sensitivity may going to get increased. Demand may going to get increased. Then difficult comparison effort. If you are not in the position to compare this particular product with other product, then sensitivity will come down. Total expenditure effort. So overall cost is going to come down means sensitivity will come down, else it may going to get increased. End benefit effort. If I am having more benefit, low sensitive, less benefit based on cost to benefit, if I am going to compare, benefit is less, then sensitivity will be high. Shared cost effort. If I am going to invest the money, that cost had been shared with more than one product, then price sensitivity will be low. Sunk cost effort. With respect to sunk cost, price sensitivity is low in product which are used along with the asset previously bought. I can be in the position to use for another asset also. Then sunk investment, then price sensitivity will be low. Price quality effort. High quality means price sensitivity low. Low quality means price sensitivity will be high. Inventory effort. The product can be, I can store inventory, I can make it as a stock, I can store it for the longer period. Then sensitivity will be less. Inventory cannot be possible. Then the product cannot be stored. Then buyer can be less sensitive. Product can be stored for a longer period. Sensitivity will be high. So these are all the 9 different factors affect the price sensitivity. Then these are the 2 ways to arrive the right price. Are you comfortable? These are all the questions I selected from the past exams only. Shall I go to the next one? What are all the 3 categories of new product pricing? With respect to new product, what are all the 3 categories are there? 3 categories of new product pricing. Note it down. One is a revolutionary product. Revolutionary product. Second one, evolutionary product. Evolutionary product. And Me Too product. Revolutionary, evolutionary and Me Too product. 3 different categories with respect to new product pricing. Revolution, it's a unique in nature. One new product has comes into picture. Till now this type of product is not there. Then it's a revolution. Then we can charge premium price for that particular product. Evolutionary product. I am going to upgrade the previous version. So evolution happened. In the circumstance also we can charge more. Me Too product. What is there in the market? The same going rate. Okay, similar product I am producing. So these are all called market followers. So what is there in the market? The same manner I may going to produce. So then it is called what? Me Too product. Based on the flow in the market, I am going to produce and sell the product. These are the 3 different categories of new product pricing. All are comfortable, my dears? Any doubt in this question? The doubts irukagana? Shankita madam, any doubt ma'am? Hope you understood. Okay. Shall I go to the next one? The question, Plumber? Okay, then. We'll go to next problem. Next question is also pricing policy. Yeah. An organization manufactures a product, particulars of which are detailed below. Annual production 20,000 units, material cost rupees 60,000, other variable cost rupees 1,20,000, fixed cost rupees 40,000, total cost rupees 2,20,000. Apportioned investment comes to 2 lakhs. Determine the unit selling price under each of the following category. First one, 20% return on investment. Second one, 30% markup based on total cost. Third one, 20% profit on net selling price. Next one, 15% profit on list sales when trade discount is 30%. Next one, 40% markup based on incremental cost. And last one, 50% markup based on value added by the manufacturer, assuming that the organization's tax rate is 52%. So totally 6 requirements are there. Kindly go through the question. Each situation separately, we have to find selling price. We have to fix the price. Shall I start, my dears? Yeah. First situation, 20% on investment. Selling price supposed to be 20% on investment. Sales quantity 20,000 units. Am I right? Selling price is supposed to fix. Let X is equal to selling price. Therefore, sales revenue is equal to 20,000 X. Material and other variable cost. Material cost 60, other variable cost 1,20,000. Therefore, sales revenue minus variable cost is equal to contribution 20,000 x minus 1,80,000 less fixed cost. Fixed cost comes to 40,000. Balance is equal to earnings before tax 20,000 x minus 1,80,000 plus 40 is equal to how much? 2,20,000 minus of minus. Clear? Less tax at the rate of 52% agana. Yeah, 52% is a tax. Balance is equal to profit after tax remaining 48%. So 20,000 into 48% is equal to 9,600 x minus 2,20,000 into 48,000 is equal to 1,05,600. Now, required profit is equal to how much the profit they need? Required profit is equal to 20% on investment. Investment 2 lakhs, out of which 20% is equal to required profit. Two lakh into 20% is equal to how much? 80,000. Am I right? Therefore, 80,000 is equal to 9,600 x minus 1,05,600. So, $80,000 plus 1,05,600 is equal to 9,600 x. 80,000 plus 105,600 is equal to how much? 1,85,600 is equal to 9,600 x. So x is equal to 1,85,600 divided by 9,600 comes to, am I right? 19.33. Is it right or not? Kindly check it up, my dears. Shankita, it's right, total right or kappa? Kindly check it up. Kindly check it up the total. Okay. So desired selling price is equal to 19.33. Kindly check it up the total alone. Now, shall I go to next one? Next. Oh, thank Thank you, Kanu. The next one is what? 30% markup on total cost. Required profit is equal to 30% markup on total cost. Next page it's not going. Okay, I'll go to second requirement here itself. 20% markup, 20% profit on net sales. Second requirement. Required profit is equal to 30%. Second one. 30% on total cost. 30% on total cost is how much? 2,20,000 agana. Yes, total cost comes to 2,20,000. Am I right? 1,4. Given in this question itself. Yes. %30 on 2,20,000 is equal to how much? 66,000 is the required profit. Therefore, 66,000 is equal to, we have to fix the selling price. The same 9,600x minus 1,05,600. Same computation. 66,000 is equal to 9,600x minus 1,05,600. Am I right? 105,600. Yeah. So 66,000 plus 105,600 is equal to 9,600x. 66,000 plus 105,600 is equal to எவ்வளவு கண்ணா? 1,71,600. 1,71,600 is equal to 9,600x. Therefore, x is equal to how much? Divided by 9,600 is equal to 17.87. 875. So, desired selling price is equal to 17.875. Total rate check பண்ணிக்கோங்க. Are you comfortable? Next. Third requirement. %20 profit on net sales. Out of sales we need 20% profit. Happen. Required profit is equal to 20% on net sales. 20% on sales, how much we took? 20,000 x. So 20,000 x into 20% is equal to 4,000 x is a required profit. Therefore, 9,600 x minus 105,600, right or not? 9,600 x minus 105,600 is equal to 4,000 x. Therefore, 9,600 x minus 4,000 x is equal to 1,05,600. So 5,600 x is equal to 105,600. X is equal to what? 105,600 divided by 5,600 is equal to 18.86. So desired selling price is equal to 18 rupees 86 paise. Got it, my dears? So, any doubt in this? Third requirement over. Now we have to go for fourth requirement. %, profit on list sales when trade discount is 35%. Yeah. Similar to this, you have to prepare. For the fourth requirement, sales quantity 20,000, selling price, list selling price MRP X means sales revenue 20,000 X less discount. How much discount in fourth requirement? Discount is equal to 35%. So 20,000 into 35% is equal to 7,000 x. Balance equal to net sales revenue 13,000 x less total cost 2,20,000. Therefore, earnings before tax is equal to 13,000 x minus 2,20,000 less tax at the rate of 52%. Balance equal to earnings after tax remaining 48%. 13,000 into 48% is equal to 6,240 x minus 2,20,000 into 48% is equal to 1,05,600. This is what the profit. How much the profit they asked? Required profit is equal to 15% on list price, 15% on MRP. So, the required profit is equal to 15% on list price. So, 15% on 20,000 x. So, 20,000 into 15% is equal to 3,000 x. This is what the required profit. So 3000x is equal to 6240x minus 1,05,600. So 3000x minus 6240x is equal to minus 1,05,600. So minus 3240x is equal to minus 105,600. So x is equal to 1,05,600 divided by 3240. So selling price is equal to 105,600 divided by 3240 is equal to 32 rupees 59 paise. Comfortable? Fourth requirement is also over. Next. You have to go for fifth requirement. %40 markup based on incremental cost. Required profit is equal to 40% on incremental cost. What is incremental cost? Variable cost is an incremental cost. So 40% on variable cost. Okay. So how much the variable cost in this question? Material cost is a variable cost. Other variable cost also a variable cost. Few of them took only 1,20,000. That is not correct. Even the material cost also variable cost. 60,000 plus 1,20,000 is equal to 1,80,000 is a variable cost. 1,80,000. Out of is 40% is the required profit. 1,80,000 into 40% is equal to 72,000 is the required profit. Therefore, 72,000 is equal to 9, the original one, 9,600x minus 1,05,600. Am I right? 9,600x minus 105,600. So 72,000 plus 105,600 is equal to 96,000x. 72,000 plus 105,600 is equal to 1,77,600 is equal to 96,000x. X is equal to 1,77,600 divided by 9,600 is equal to how much? 18.5 agana 18 rupees 50 paise. Is it right? Okay. Desired selling price is equal to 18 rupees 50 paise. Rupees 18 rupees 50 paise. சங்கீதா டோட்டல்லாம் செக் பண்ணிக்கிறீங்களா? தப்பு இருந்தா சொல்லுங்க. Next. One more requirement is there. Right? Fifth requirement over. Now we have to go for sixth requirement. Yeah. 50% markup based on value added by the manufacturer. Assume that Okay, corporate tax is 52%. Value added by the manufacturer. So, sixth requirement, required profit is equal to 50% on value added by the manufacturer. What is called value added? Even yesterday's transfer price we come across what is called value added cost. Can you please tell me what is called value added cost? Any idea what is called value added cost? Can you respond? When yesterday we discussed, right? Value added by the manufacturer. So value added cost represent total cost minus raw material cost. Other than raw material cost is called, value added cost. 50% on total cost, I think 2,20,000 agana. 2,20,000, raw material 60,000. Total cost 2,20,000 minus 60,000. So 2,20,000 minus 60,000, out of which 50% is equal to required profit of 80,000. Required profit is 80,000. Therefore, 80,000 is equal to 9,600x original formula minus 1,05,600. So 80,000 plus 1,05,600 is equal to 9,600x. So 80,000 plus 105,600 is how much? 1,85,600 is equal to 9,600x. So x is equal to 185,600 divided by 9,600. So required selling price is equal to 19 rupees 30 paise. 19 rupees 33 agana. 19 rupees 33 paise is a desired selling price. In case of 19 rupees 33 paise, you will get what? Required profit of that 80,000 rupees. Got it? All the 6 requirement over. I'll sum up. Answer for the first requirement, selling price 19 rupees 33 paise. Correct? Okay. Second requirement, follow up. 17 rupees 87 paise. Third requirement 18 rupees 86 paise. Fourth requirement 32 rupees 59 paise. Fifth requirement 18 rupees 50 paise. Sixth one 19 rupees 33 paise. Check it up right or not? Got it, my dears? Good. Any doubt? Good. So, dear students, with respect to the self-based online module program, especially for the costing paper. I am having e-notes. If anybody want, you can be in the position to get the e-notes. You can purchase the e-notes. Just 250 rupees only the e-notes. It consists of all the notes for all the chapters, both theory, including MCQs, and practical problems and solution. Whatever the problems is solved. Because majority of the problem in old syllabus based on case study based question, they are converting into MCQs. And many repeated past exam questions also they are coming based on the students' students' communication. They said one past exam questions also they are repeating by way of MCQs. So the notes also available. If anybody want, you can be in the position to get the notes from me. You can write down the number. If any other help or anything you want to discuss with respect to this particular paper, you can feel free to WhatsApp me 98416 61405. Today my number is there in the PDF itself. 98416 61405. You can WhatsApp me. Any doubt with respect to this particular costing paper, you can feel free to WhatsApp me. Clear? Hope you enjoyed this session. All the best for your examination. Study well. It's a mandatory paper you have to complete. After that only you are eligible to write the group 2 examination itself. Similarly, in group 1, law paper is a mandatory. After completion of law only, MCQ paper law only, you can write group 1 examination. And once again, this particular paper, you have to refer for last paper, 6th paper, in main examination 6th paper, IBF. So integrated business solution, that particular paper, again, you have to refer the costing part. There also they are asking marginal costing, transfer pricing, pricing distance, standard costing, TQM, clear, throughput accounting, all those things they are asking. So it's a 2-in-1 paper applicable for this examination, MCQ examination, as well as your last examination. So study well. Wish you all the very best for your examination. Soon everybody should clear the examination. You should be my professional colleague. Okay? My best wishes, my dears. Hope you enjoyed the session. Thank you. Thank you. Good night. Yeah, thank you. Good night, my dears.